Okay, today's Cardinal Lesson is a big misunderstood fact about Social Security, and that's how federal income tax is applied to your Social Security check. This is one of those areas that some people think they know, and they really don't, because they've gone to this chart that if you Google Social Security income tax, Social Security taxes, you're going to get this thing from the Social Security Administration, which is the printout that describes this whole formula to you. And I'm going to walk you through what it is first, and then I'm going to tell you how it's misconstrued. So, it defines provisional income, and we're going to walk through the board. But before we do that, I'm going to go to Tom, and I want Tom to share why we're doing this video today.
Yeah, I mean, we're doing this video because this is something that most people do not understand how this works. And when you look at it, and they have these crazy formulas to determine how much of your Social Security is taxable. Then they have these how much of it is, and then you go to the tax brackets. It's confusing, right? So I'm not blaming you, but what we see all too often is people overestimate how much taxes they have to pay on their Social Security check, and they make bad decisions with wrong information. And so we just want to take a step back, walk you through the sort of the how they define everything and the formula they give you, and then give you examples of how it actually works and show you what that looks like. And so I think it's important. I think you'll get a lot from this. At the end of the day, call us if you have questions. We can run this. I'll show you. I can run this pretty quickly. Tell you what it's going to be pretty accurately, and then help make some good decisions. So let me bring up the show notes. You can find these below the link on our video. They're also on our website at cardinalguide.com. They're pretty light today. We have the board, which again, we'll get to that in a second. And then a little bit later in the video, I'm going to show you sort of live examples of doing the calculations of the ones on the board. And that will be included in the show notes on our website as well. So I'll turn it back to Hans, and then we'll get going here.
Okay, I just took the essential facts that you're going to find in this page and a half thing on Google, uh, put out by the Social Security. I just have the essential facts up here. So if you're going to try to calculate this yourself, and a lot of people do, they come to us and they tell us, that they're going to pay probably taxes on about 85% of their Social Security, and they're not correct, unless they have a huge income. So we're going to start out with, you have to know what your provisional income is. This is just a number invented by the IRS and Social Security. It's not your real income. It's just a number they're going to use to calculate how much or what percentage of your Social Security income is taxable. And provisional income, you start with your adjusted gross income, AGI, and you have to turn it into modified adjusted gross income, MAGI. And you take your MAGI and you add half your Social Security benefits. And if that's a couple, it's both your Social Security checks. If that's a single, it's one of your Social Security checks. So we're only counting half the Social Security benefits added to your other income. And then we're going to apply it to this formula. And so the formula says if you're single and your provisional income is over 25 grand, but less than 34, you're going to pay up to 50% of your Social Security will be taxable. If you're over 34 in provisional income, up to 85% of your Social Security benefits are taxable. Married filing joint, if your provisional income is over 32,000 but less than 44,000, up to 50% of your Social Security benefits are taxable. And then if you're over 44, it's 85% are taxable. And so what we've done is we've created a couple of examples. We have a couple that their other income is 40 grand. Their modified adjusted gross income is 40 grand. Their Social Security is 60 grand. So this couple really makes 100 grand, but their provisional income is 70 grand because of the half the Social Security. And on the single person, we have 20 grand of other income, 30 grand of Social Security. Their real income is 50 grand. But when we get the provisional income, it's 35 grand. And so I'm going to push it to Tom to show in these examples how much of their Social Security is actually taxable. And what we're more interested in, what is their federal income tax liability for this couple on 100 grand and what is their federal income tax level on this single person at 50 grand.
Yeah, so I mean, I think it's a great example. This is a very typical client that we have come in, similar incomes here. And so let me bring up. There's an Excel file. If you've watched our channel, you know that I can do sort of mock-up tax returns. A couple assumptions I'm making here for both examples. I'm going to assume the people in this example are over 65, so there's an additional $6,000 deduction that they're getting per person. You can watch some of our other shows there. So that's an important one. But let me do the couple first. So again, I've typed married filing jointly, have their dates of birth. Again, just they're over 65 is the important piece there. And I have IRA distributions of 40,000. So they're pulling money out of their IRA to live off of, just to supplement their income. And then 60,000 of Social Security. So like Hans mentioned, they have 100,000 of total income coming in. And so you go through and run through how to calculate that provisional income, like Hans did on the board. Take half of the Social Security, that's 30,000, plus the 40,000 of income they're in. They're at 70,000 of provisional income. You look at those numbers, you say, oh, they're paying 85% tax on their Social Security. Well, not so fast, right? I mean, the software does the calculations for us. In this example, only 28,000 of their Social Security is taxable, not the full 85% yet. Now, if they had higher income, then yeah, eventually that would get to 85%, but it's not a cliff, right? Things like IRMA, where if you're $1 above the IRMA threshold, you pay that IRMA bracket. This is the taxation on Social Security is not like that. It's phased in over time. So they're still less than 50% of their Social Security is taxable in this scenario, which is surprising to most people. So then we look at, okay, so how much are they actually paying in tax? So we have the 40,000 of IRA coming in. 28,000 of the 60,000 they're getting is taxable. And so then you add those two numbers together to get to your gross income of 68,000. Gross income on the tax return, or not their gross income, what they actually receive, because they're receiving 100,000. They take the standard deduction. Again, these are 2025 rates. They get the additional senior deduction of 6,000 per person, so an additional 12,000. So at the end of the day, their taxable income is only $21,000,
That's their
21,400.
tax. That's not
That
the taxable income, it's their tax.
Well, the 21,000 is their taxable income. The
Okay,
total
I'm sorry.
tax on that is $2,100, $2,143. Federal tax, we're ignoring state taxes for this example. That is very, very low. So they have $100,000 of income, and they're only paying $2,100 in federal tax. I mean, again, most people way overestimate what they owe in taxes here, and so again, we just like to point that out because it's an often misunderstood thing. So let me go through the single tax example. Again, it's going to be a similar result here to the married, but just slightly different numbers. So let's do the IRA distribution. I think we had that at 30,000. Is that right, John?
Correct.
Thirty
No, we had it
thousand.
at 20.
Twenty
Excuse me.
thousand.
It's 20,000.
20,000, and then the Social Security was 30,000, I believe. Is that
Correct.
right?
That's correct.
So again, I'll just walk you through real quick the change I made. We now have a single tax filer, again, over 65. That's important for that extra senior deduction. They have 20,000 IRA distributions, 30,000 of Social Security. Again, it goes through that provisional income, those calculations. At the end of the day, only 5,000 or 5,300 of their Social Security is taxable. That gets added to the 20,000 of IRA distributions they have. So we get to an adjusted gross income of 25,000. They take the standard deduction of the 17,750. They get the additional $6,000 senior deduction, and so their total deductions are that their total taxable income is 1,600. They pay a whopping $161 in federal taxes. I mean, essentially nothing, right? I mean, that's very, very minimal amount of federal taxes owed. Again, ignoring state taxes for this example. When you look at the formulas that John put or Hans put up on the board, you would have assumed they would have been paying a lot more taxes on their Social Security than that. So at the end of the day, most people way overestimate how much taxes they pay on Social Security. And again, I think it's important to understand sort of the mechanics. If you try to look at the formula they post and try to figure it out yourself, you're never going to get the right answer. Call us, use software like this, something that will help you calculate so you get a more accurate estimate of how much of your Social Security is taxable, and then you can look at the tax brackets to determine how much you actually have to pay on that.
I mean, Tom, in your example, this single dude, he's 3.2 2% effective tax rate on the 50 grand that he's taken home. And in the couple, it was little over 2% effective tax rate on the 100 grand that they're taking home. It's just nominal. And if you looked at this chart, both of these people would assume that they're paying 85% of their Social Security is taxable. Which put into the formula, it's just, even if they had a little more income, even if they had double this income, they're still not going to get to anywhere near the taxes that you thought they were. So I want to just talk about comprehensive financial planning. How does this fit into that? Well, Social Security is the first step that we take. It's the first issue, the first worry that we look at in a financial plan. And it's also very necessary money that comes in every month as long as you're alive. The taxes on it are the part that's misunderstood. And taxes matter in retirement. I mean, they do. And we want to estimate that, and we want to use it to make other decisions. And, maybe we talked a little bit about income because, we've shown you a single person living on 50 grand that paid 3% effective tax rate. And we showed you a married couple living on 100 grand paying a 2% effective tax rate. We didn't really talk about estate, IRA, 401k, I guess a little bit, because that's where they're pulling their modified adjusted gross income. And so when we do a financial plan, we go through all 7 of these worries, and we go in and we do the planning for you. So I want to bring Tom back on. I'm Hans Scheil,
And I'm Tom Griffith.
and we thank you very much for listening.
Thank you.